Ukrainian drones hit the Kirishi oil refinery. It's one of Russia's biggest, close to St. Petersburg.
German industrial production is underground. It's hard to see what way out there is for Germany out of this crisis.
The auto sector here in Germany, it really looms large in the German political identity.
Investors are investing in the dark. Hey, welcome to The Dip, the only podcast ever in the world that connects the world of money to the US and the US to the world of money. And I'm Kassandra.
And I'm Daniel. And today is our Q&A episode where we answer to you. We're going to try to get some answers to these questions you've been leaving under our episodes. And of course, if you ever have a question that you think one of our experts can answer, or if you just want to stump us, leave us a question under one of our answers, one of our episodes on YouTube. But up first, there's a lot of questions right now about the US economy. For example, WTF is even happening because the government shutdown means that there are delays on economic reports, especially key reports like from unemployment.
And that means investors are investing in the dark. So we got a question from one of you for what else to look for if these signals are not coming in from the government.
So Mellow Inventor asks, what are the major leading indicators looked towards to recognize market contractions, if any? Are there any indicators economics students can use that are not dependent upon the U.S. government?
So we decided to put that to Paisley Nardini. She's head of multi-asset solutions at Simplify Asset Management. And here's what she had to say.
Yeah, a couple ideas here. I would say there's probably actually more indicators and data points that the market can reference to think about where the economy is headed, where markets are headed beyond just government data. So that's the good news. Some examples of these might be looking at the level of equity valuations. So if you think about, price to earnings and a lot of these companies being considered overvalued in this environment, we can look at valuations across sectors, across markets, across regions to determine where might there be attractive valuations for long-term investment. I would say another barometer of the health of the overall economy is looking at corporate profits and corporate earnings. So those are released, of course, by individual companies. So those are not dependent on the government. And that gives us a good idea of how the overall economy is doing, because if we as consumers are spending money at these businesses and they're profitable and they're employing the general population, then that's a good sign for the overall economy. So corporate profits and earnings is another one. I would say commodity prices. If we think about commodities, tend to be cyclical, with the exception of, say, gold, which is viewed as a safe haven asset. If we're seeing the overall rise of commodity prices, that probably tells us the economy is headed for more manufacturing, building, and thinking about the use of natural resources.
Yes, what really jumped out at me from Paisley's answer? It seems that investors are big on belief when it comes to stocks. And at the moment, certainly, they're not very big on actually looking at the fundamental valuations. And at the moment, bonds are less attractive. They're becoming generally less attractive because people are expecting there to be a rate cut. The dollar is weakening, and so they're going to stocks because they're on the search for liquidity at the moment.
Right, that shot of adrenaline, so to speak. But markets are rising, right?
Well, so markets are rising not because of what investors know, but because of what they don't know. So they're going to have to make their bets and just hope that when the government data comes out and they see actually the macroeconomic situation, how it's doing, that they're not caught with their trousers down. Because you can imagine if you're having a market which is rising and the price signals are going up and you just say, nah, I'm going to chill out for a bit because I'm a little bit worried.
Right.
And then it turns out that actually everyone else was right and you're caught behind. You didn't move up with the prices moving up in the stocks. Then that's a big issue. The problem is, if we're, as we might expect, if the Fed isn't going to make its cut, if it does a pause instead, then that kind of unravels all of that logic. And of course, if inflation spikes as well, and then the Fed further decides that it's not going to cut rates, it's going to pause for longer, even eventually hike rates. We don't really know further down the line. The signals aren't there yet, but it could do it further down the line. That will catch these investors who've put all of their eggs in this basket a bit off guard, though that is partly why they're putting some of their money into gold as a hedge against that, but still that risk is mounting up.
Right. It kind of sounds almost like FOMO, fear of missing out, versus the joy of missing out if you weren't weren't to also suffer the negative consequences.
Is JOMO a thing?
I don't know. It felt right in the moment.
Should be.
I felt right in the moment. But overall, it seems like we're in wait and see mode. The longer the shutdown goes on, though, the greater the risk of the snapback, because there's going to be more time in the darkness before those lights get flipped on, like you said.
Yeah.
Now, a favorite topic here at DW is just how poorly the German economy is going.
That's right. The turnaround was always going to come, and then it was going to come a little bit later, and then a little bit later on, and we're still waiting for it.
Yeah, cue that song from Annie, Tomorrow, Tomorrow. But sometimes it's just next year. And the economy, it was a major reason that the last German government collapsed and early elections were formed. And that's where the now Chancellor Friedrich Merz was ushered into power. And on one of our DW News videos about the German economy, Mr. Leiter had this to say.
Wasn't Merz going to cut bureaucracy? And instead of sending the money to Ukraine, which is fighting a losing war, they could use that money for even further investments in their own German economy.
So for this one, we had to bring in the big guns. We talked to Chief Political Editor Michaela Küfner about whether Merz has been able to slay the bureaucracy beast.
Well, it's interesting that this viewer or user links these two issues. I mean, they are fundamentally separate. One is an issue of European security. That's the support for Ukraine. And the other issue is fighting bureaucracy. Both are pretty intense, actually. The support for Ukraine has a broad base here in Germany. Poll after poll shows that Germans are actually in favor of continuing to support Ukraine. And if anything, the recent drone sightings, particularly over Poland, which were clearly attributed to Russia, many weren't, that have shown that there is potentially a hybrid confrontation, if not even war, going on. And that is something that Germany is willing to earmark quite significant funding towards, just as it is now bolstering its own defense. The question of bureaucracy is really a completely separate one, but it does cut through all areas of the German government and also the German economy, because we have a lot of companies complaining that this is an issue that has to be tackled. It has to be tackled fast. The diagnosis is there. The German chancellor shares it. And at the same time, he's having a pretty hard time to demonstrate that he has found that silver bullet to cut through it.
So Daniel, I'm really of two minds when it comes to this almost perma-complaint of German bureaucracy, right? So on the one hand, redundancy can mean that fewer mistakes happen, that fewer things slip through the cracks. So I get that, right? But on the other hand, even in my own personal life, there's plenty of examples of how paperwork and bureaucracy in Germany just pile up, just stacks upon stacks of paper. And I can imagine that on a business level, or when you're looking even more macro, at a German economy level, that it's just really hard to deal with these layers and layers of red tape. And then when you have to shift the German economy to get it into the positive again, you're really talking about moving this really big ship, and those turn slowly.
Yeah, we have a very high Cassandra anti-bureaucracy ratio at the moment, and it is going higher. But of course, industry leaders for a long time have talked about exactly these kinds of things, right? And I remember I was at the Hannover Messe, which is an industry trade show in Germany. All of the big leaders are there from German engineering, the car industry and machine building. And they told me that they want less bureaucracy. They want tax cuts. They want to loosen labor regulations, get people working into old age and until they fall down dead. Well, they didn't say that.
Right, but those are the hits, right?
Those are the hits that they always wheel out. The problem is, and we heard this last week from Steve, that for 2 centuries, Germany has been the workshop of the world. I mean, we're not just talking about the car industry. We are really going back like nearly 200 years with the likes of Siemens building these massive turbines which would power cities, and shipbuilding was a big thing in Germany as well, and making all the parts and components for this kind of thing. But it's ended up that we're in a place which reminds one of the UK in the 1970s.
Yeah.
During Thatcherism, I mean, she saw, a lot of these industries were redundant. We can get a lot of these products from abroad now where it's cheaper. So you had complacency in industry, you had high costs in industry, and then with Thatcher coming along with that kind of policy drift, you ended up getting rid of a lot of these key industries. And so that was an important factor which Germany is now trying to fight against. It doesn't want to head down that same road. But where can you go when you've got China knocking at your door? Germany invented a lot of key technologies like solar, for example, but China can just scale up faster. It has the deeper pockets. It has the government that is willing to just force people to invest in certain industries if it can. And then it is able to sell them across the world. So that is the complex issue that Germany has to deal with now. It's not just a case of selecting a different area and saying we're going to be specialists in that. And in areas like the AI, they're far behind. And is Germany going to become the world's biggest chip maker? That's not going to happen. They're too far behind, and China can do it better. And so at the moment, when you've got Europe as a market shrinking for car makers, for example, and when across Europe you're having the same issue that Germany is having, where China is just so damn competitive, it's hard to see what way out there is for Germany out of this crisis, not just in the car industry, but deindustrialization in general.
Yeah, you mentioned cars, and there was this really flashy international motor show just a few weeks ago in Munich. German automakers, they're really struggling despite the show that they put on at that time. And just in like these other sectors that you mentioned, there's the increased competition from Chinese EVs, which are seen by many consumers as not only more advanced, but also cheaper. And on one of the DW News business programs that we put on YouTube about last month's International Auto Show in Munich, Derek Nyana did ask us the following.
Yeah, Derek asked, so wait, what about the combustion engines? A few months ago, they said Mercedes will continue to use V8 engines on their cars. Now I see them with the EVs. I need more information about this.
Well, we have the answers that you need, Derek. We turn to more information from our very own Steven Beardsley, who was there, and he had this to say.
Mercedes saying recently that it's rolling out a new V8 engine, but this is an electric V8, and specifically it's a hybrid. It's supposed to be much more efficient than past V8 engines, past hybrid V8s that it's developed. It received a lot of criticism in recent years because it replaced the V8 engine in one of its classic AMG models, the C63, with a V4. That created a lot of backlash. People still want that kind of power from a V8, but then many are skeptical about sort of the electric side of it. Mercedes says that it stands behind this V8, that it's, even though it's electric, it's hybrid, that it still has the kind of power, the raw power that users expect, that drivers expect, and they're actually reproducing the kind of V8 noise that one would expect from the engine, even though this is an electric model, hybrid model. And I think what's interesting is that this issue really touches on the kind of backlash that many of these car makers, especially in the premium and luxury brands in which Mercedes operates, to the kind of classic engines, the kind of classic big, loud engines and the performance behind them. Now, many car enthusiasts, experts who really make their living from driving cars and comparing these things all the time, they're still enthusiastic about electric. But I think for many consumers there, it's really this kind of combustion legacy that they want to hold on to. And again, that speaks to what we're seeing in amongst these car makers who are saying, we want to offer you the same kind of packaging that you know and love from these sports cars, from these luxury cars, but we're going to create electronic architecture. And that's really a shift away from the earlier years of exploring EVs, in which the idea was to create an EV that looked different completely, right? Because it was a different drive system. It had to look and sound different. Now the thinking is more, let's merge the design between combustion and electric together so that when you buy this model, whether it's electric or combustion, it looks the same, but you're going to get that kind of electric drive system, and it's going to be really good. It's gonna match up with your expectations right down to the sound. And so I find that really interesting. They're trying to speak to this buyer of a combustion engine, but still with electric components.
Thanks very much, Steve, for your answer. And of course, if you have questions just like Derek, you can leave them as a comment under this video on YouTube, or if you want to email us, you can do it at thedip@dw.com.
But thinking about the auto industry in Germany, right? VW, it's the largest employer by workforce in the entire country. But of the top 10 employers in the country, there's no other car makers on that list anymore. True, you've got Continental on there and they make tires and other auto components, but it's one of these things where, on the one hand, while the auto industry makes up 6% of GDP here in Germany, manufacturing and pharmaceuticals are also a really big part of the economy. But when we're looking at, on the other hand, the auto sector here in Germany, it really looms large in the German political identity. In the US, it's a lot like how politicians talk about coal miners, right? Yeah. They might not be such a big part of the actual employment. Not so many people are employed in that sector anymore because of efficiencies and so on, but it's really part of the popular imagination, right? So it's really critical how this industry is doing. But not to belabor the coal mine thing too much, but the auto industry here is a bit of a canary in the coal mine, because the things that are going to cause problems for the auto sector here are going to cause problems in other part of the industrial base, things like high energy prices or competition from abroad. So all these things are and will continue to cause problems when we're talking about competitiveness in the future.
Yeah, and this is something that we brought up last week, didn't we? So I love to torture metaphor, so I'm going to use the mine one again. I mean, the German industrial production is underground, essentially. I mean, we're talking like 2005 levels of industrial production at the moment. So it's serious. I mean, we heard Steve last week talking about how car industry production fell 18.5% month to month in August. And, I looked up what Franziska Palmas from Capital Economics said, and she put it bluntly in her note. She said that temporary car plant closures for summer vacation was behind that fall in industrial production. That's why the numbers have hit so low right now. But that those might not be as temporary as the car makers would like, and that these shutdowns, the retooling and all of these kinds of things, that there was their explanation for shutting down temporarily, that these might not go as intended. And to put it simply, the outlook for German industry remains poor, according to Franziska Palmas. And that was kind of confirmed by a conversation last week, I think.
Yeah, I think it was too. And it does seem like that post-vacation hangover is really hitting, because the German government, they're trying to pull the auto sector out of the doldrums right now. There was a big meeting between top government officials and the auto sector top brass last week. And of course, if you want to find out more information about how that went down, you can find that episode wherever you're watching or listening to this one.
So something else that's been on you guys' minds this week has been Russia's war on Ukraine and the effect that it's having on Russian energy. So this time, Jos Portfliet writes,
maybe you can tell us what the real impact of Ukraine's strikes on Russia's refineries is. Some say 15% of production is down, others say 38%. Thanks a lot for that, Josh. Now, this question is about the drone strikes that have been conducted within Russia by Ukraine. And one look by the DW Russian service found at least 11 oil refineries have been attacked. Those combined with other likely attacks mean that just under half of Russia's oil refineries have been hit by drones.
That's right. And for some analysis on what the real-world effects have been, we turn now to Gzegorz Szymanowski, who is DW's Riga correspondent.
Hello from the DW studio in Riga, Latvia. We've been covering Russia from here ever since the Russian authorities have banned DW from the country shortly before their invasion of Ukraine in 2022. So to the question, by how much is Russia's oil refining really down? The highest estimate that you gave, 38%, refers to the share of Russia's overall oil refining capacity from those refineries that were hit by Ukraine recently. But we need to remember that these drone strikes rarely take the entire refinery offline, and Russia is also working hard to repair them. So in reality, this drop is smaller. Just to give you an example, by early October, Ukrainian drones hit the Kyryshi oil refinery. It's one of Russia's biggest, close to St. Petersburg. But it didn't take the oil refinery completely off the grid. One distillation unit was shut down, but the whole refinery is still operating at estimated 70% until the repairs are done, and they are expected to take about a month. So experts looking at numbers say that Russia's fuel production is down by some 10% from July. So the situation is far from catastrophic, but it did force Russia to ration fuel in some regions, and it is also forced to boost fuel imports from its ally Belarus. So this is the situation for now, but this Ukrainian campaign is still ongoing, and we will see how much damage will they be able to inflict on Russian oil sector.
Thanks, Gzegorz, for that explanation there. And the West has long warned of Russia's economic decline. It was always a long time coming, but it's never really happened. But I would say, and we got into a little bit of that idea with Gzegorz, that it's just papering over the cracks, this data that it's put out.
Yeah.
The GDP has been rising, but that's mostly down to the military production that's taken place, which is kind of juicing the numbers there.
Right.
And yet the Russian economy has shown strain for the last 3 years. Even its central bank has admitted that. GDP has grown, but you have all of the difficult effects underneath, where you've got major firms now shortening weeks in order to cut costs.
Yep.
They've avoided layoffs on a mass level so far, but they're coming under greater pressure to do that. And again, that is something that Russian economists are also saying. This is not just something that's completely out of the blue. We don't have, though, a clear timeline for when there is going to be a major kind of cliff edge where there's no way back for the Russian
economy. The dominoes
economy.
are just going to fall.
Exactly. But we have this issue where Ukraine is putting pressure on Russian energy, which just adds more to that bonfire for the Russian economy. So it's uncertain whether this could actually end up shifting the war strategy, but certainly Putin is coming gradually under more and more pressure due to the economic circumstances taking place in Russia.
And that's it for us here on The Dip. If you like what you heard today, please rate and subscribe. Give us a thumbs up. Just show your accolades, please.
Yeah, and of course, if you want to give us a question that we'll answer on our next Q&A episode, then you can leave it as a comment under any of our YouTube videos or send it to thedip@dw.com, and it should arrive in our inbox, and we will promise to at least read it.
And we'll be back in your feed on Friday. Thanks for listening to The Dip.
Bye-bye.